Welcome to the Rachel and Cassandra show. Before we begin, our disclaimer. Rachel and Cassandra both live and work in Michigan. They are only licensed in their respective fields.
Awesome. Hi, everybody. I always try and do that damn intro. You know what? I do want to say something before we get too far going, and that is this. We neglect to ask you guys to subscribe to our show, and if you get value or you like what we're offering, if you don't mind, whatever you're listening on or watching on, if you could subscribe so we know that you care, that would be good. That way we could do more of what you like and less of what you don't. Right? Is that appropriate?
It's a little echo chambery sometimes because it would be nice to have feedback, right?
Yep. Anyway, today we have a topic which
we have been talking about this topic for 6 weeks, maybe?
Yeah, at least 6 weeks. It's been on deck and it keeps getting bumped for other topics, but I'm excited about this one. Or I'm interested. I'm not excited. I'm interested to talk through the why. And that is mortgage burning parties. Cassandra?
Yeah.
This one came from Cassandra, and it was interesting. Why don't we have mortgage burning parties anymore?
Yeah. I had read a really interesting article with some historical, it sounds so boring. I read a really interesting article with historical mortgage data.
Yes.
Like, it sounds so lame.
For the right audience.
My teenage self hates me. But I read this really interesting article to me. Anyway, and so we started to have the conversation because I wanted to relay it to Rachel. And she was like, no, shut up. It's going to be a podcast. So I have yet to have this conversation with her because we like to be all new and fresh.
Yeah, keep it. Yeah. It's everything you see or hear out of us is 100% authentic and never scripted. Not sure if you could tell, but it's true.
We flow like butter. It's like,
yes,
we flow like butter. It's awkward pause. Yeah. So anyway.
So mortgage burning parties. And let me just tell you the visual that I get as soon as you brought up the topic. Do you remember when Mom bought an eagle for the front of the house and put it on the house? It was an exterior piece of decor. You don't see it anymore, but I remember her telling me that an eagle on the outside of your house, the black, do you know what I'm talking? You look like you have no idea what I'm talking about.
I want to Google it so bad.
Well, hold
continue.
on. Let me do better. So do you know how like you see people with the star, like the Pinterest? Yes. Instead of the star, it's an eagle. Mom put one over the picture window on the house on Sibley Street. And she told me at the time, and I was probably 14 or 15, that it meant that your mortgage was paid off. Like it was a signal to everybody. I don't know if this is true. Maybe I dreamt it. But every time I see an eagle on somebody's house, I'm like, I wonder if their mortgage is really paid off. Maybe that's what you get at the end of your mortgage burning party.
Like
or maybe I dreamt it.
Sends you an eagle.
Right. A cast iron eagle for the outside of your house.
Thank you for the hundreds of thousands of dollars you've paid in interest. Here's your eagle. Free eagle with $100,000 in interest paid.
Yes. 18% interest or higher. Free eagle at the end of the ride. It's like your gold retirement watch. Gee, thanks. Or your company swag.
A Rolex, please. A Patek Philippe, maybe? I feel like I said that wrong. Ha ha.
Is that how you say it? Ha?
I don't know.
Tag ha. Anyway, we are here to talk about mortgage burning parties.
I was literally about to start badly pronouncing things in French because I started watching Julia last night. And I was like, I didn't know that's how you say that word. Okay.
Oh. Well, I am in the back of my head trying not to say that. At my company, it'll probably be a Timex.
Takes a licking, keeps on ticking.
That's right. So Cassandra, why don't we have mortgage? I mean, I feel like the dumb short, there is no episode answer is because people don't pay off their mortgages.
Yeah. But there's more. Can I go into the history of it? Do you want me to do it chronologically? Because I have a bunch of garbage to talk about, but it's all really interesting. So we can side off at any point.
Let's do it. Rabbit trails galore.
I'm going to go with what it was like before the Depression, pre-1929, what a mortgage looked like, which fucking blew my mind. Okay. So what was the average term of a mortgage? I'm asking you. Guess.
I'm going to guess. Well, I mean, just because I feel like I have to be outrageous, I'm going to say like 8 years.
6.
What?
That was the most. 6 years.
Okay. So it's like a car note.
Yes. What was the maximum loan to value?
50%?
You are correct. 50%.
Really?
So 6 years.
I'm batting 100 so far.
50% down payment.
Okay.
Was it a fixed or a variable rate?
Well, the fact that you're asking, it means it was a variable rate.
Yes, it was a variable rate. And did you know that you renegotiated the rate every year? You'd go into the Bailey Brothers Building and Loan and be like, hey, let's renegotiate the rate for this mortgage for the next year. This variable rate for the mortgage next year. This is fucking nuts to me. Yeah.
So let me just slow this down a little bit. I borrow back then, let's say I'm super loaded and I'm buying $100,000 house just for math. I know it's outrageous.
Come
Fine.
on.
$5,000?
Like,
$5,000 house?
Give me 5,000.
Listen,
100,000's like magnate level Rockefeller Biltmore estate house.
Listen, I know that. I realize that. But what I'm trying to do is give numbers that people listening today can wrap their head around.
I know.
If we start talking about a $3,500 mortgage, then we have to make adjustments for income, and people's brains are going to have to work harder to track with our analogy. So just stick with me with this magnate level $100,000 house. Because people's brains can wrap around. It's hard. You can't find a $100,000 house today, at least in my market. So, but if you're buying a $100,000 house, not only do you have to have $50,000 to put down, you also have to you're going to pay off the remaining $50,000 note in 6 years maximum. And what is my interest rate at the time? Variable ballpark. Understanding that we have to revisit this conversation every year.
I started it with 10 because rates were high.
Okay. So 10% interest. And by the way, on the 1 year anniversary, you and I are going to have a conversation about that.
We'll talk about this again. Yeah.
Wow. And what happens if I don't qualify? Well, I guess it's the Bailey Brothers Building and Loan. So it's not like I have to go requalify, but could they call the note due if they don't?
I suppose if you guys can't agree on new terms,
you have to pay the balance.
So
I have a question.
Can I just say, yes.
You know how a mortgage today is weighted with all the interest on the front end by design so that the bank always gets their money? That's
we're going to get to that later.
I know.
Yeah, we're talking about old-timey stuff.
I know. So in the old-timey mortgage, was it interest weighted at the front, or was it just a regular interest note payment like on my car?
Well, considering it was reevaluated every year, I would imagine it was a set fixed amount goes towards interest. I don't know I don't know. I don't fucking know what that loan looks like. I wish I knew.
Well, I didn't. Okay. Well, I asked the one question that wasn't in your article. Keep going though. Okay.
No idea. Okay. So it was renegotiated every year, 50% down payment, variable rate, 6-year term. As a result, more than half of the country was renters, right?
Really?
Home ownership was the exception. It was not the rule.
What?
It was very difficult. Yeah.
This is an American dream we've been sold. It's propaganda.
And then there was the Depression. And so those who did own their house probably lost their house, right? So home ownership rates tanked even further. They were already really low, and so they tanked even lower.
So hold on. You're talking about people who had not paid off their mortgage.
Yeah.
Okay.
Yeah, it was already a really small number of people who even could get a mortgage, considering the very strict and stringent terms of what it takes, right?
Who owned all the houses? Companies?
There weren't that many houses.
Where do people live?
So
Tents?
go back. No. But consider the how many houses do you show that were built in pre-1940. How many are in your county, do you think?
Downtown, well, I don't know. Downtown Howell, downtown Brighton, downtown Fowlerville, the downtowns.
Yeah. Well, people rented in buildings for the most part.
I know, but
right?
what were they, hotels? No. Were they apartments? No. Were they renting houses?
Like a room in a house. You'd rent like a flat in a house.
Right.
You'd rent like
Okay.
a level. Yeah.
Like a John Wayne movie, like what you see in The Man Who Shot Liberty Valance.
Yeah, The Border. What was the lady called? Even in building Bailey
And it's
Brothers,
always a
what
lady.
does the mother own? Yeah, it's always some fucking widow who's like,
Yes.
you don't know my son. He died.
You
Anyway.
do a really good impression of that acting
Thank
from
you.
that time frame.
Thank you. I've been practicing that. Okay, so that was before the Depression. And then there's the Depression between 29 and 34, really. And then in 1934, Rachel, I know you know the answer to this. What did the government create, right? They did the CCC. They created all these things to try to, get us out of the Depression. What was one of the things that they made out of thin air? Because the government's able to do this shit.
I don't know.
What kind of loan will you never accept on a property? What's the least favorite loan you will accept on a property? Loan type, mortgage type.
I don't know. Stop it. I don't know. I am
FHA.
Unbiased. Oh, no, I love it. That's not true. Okay, they created the Federal Housing Administration, but I wouldn't turn down an FHA loan if contextually it made more sense.
Over a cash, conventional, or VA?
Depends on the other terms. And it's not up to me to decide. It's up to my client to decide. Anyway.
Okay.
Anyway. So the government created a Federal Housing Administration.
Yeah. And they introduced a 30-year mortgage with fixed rates, and your LTV could be way higher than 50%. So you had a very minimal down payment. Right now, the FHA is at 3.5% down payment, right? 30-year fixed rate mortgage is created out of thin air, vastly different from those 6-year terms, and the government gets involved.
Yeah, so the government
goes great when the government gets involved.
Yeah, well, I think a lot of people wouldn't have houses if the government didn't get involved.
Yeah.
Not saying it's great, but I'm
going to go back to what you say.
Yeah.
Or have said. Do they own their house?
Yes.
Or?
No, it's a giant rental scheme. I believe that home ownership is a high-level rental scheme.
Okay.
And you just kind of showed me how that's true. Yes.
Yeah. Okay. So that's totally side episode. So they come out with the FHA loan, which is 30 years, low down payment, and fixed rates, right? So way better, way more possible for people to own a home.
She's doing air quotes. Here. Yes.
Yeah. And then after the war, after World War II, they come out with the VA loan for all the veterans. It's another even better, cheaper way to own a home. And there's this huge building boom, right? Right after World War II, all the like Levitt towns, things like that. This is when suburbia became a thing. It was no more rural land. There's, because all the people came home from the war, soldiers came home and had babies, and they needed houses, and so kind of tract housing takes shape with a zero down loan.
Put a pin in that, because the volume of houses built at that time was massive due to the size of the population. Yep. Go ahead.
Oh, I was going to say we could rabbit hole into like the VA loan being equal, but
or better,
black people being excluded and redlining and things like that. But it was another program with zero down payment required, and it was guaranteed by the government, right? It is guaranteed, and it hasn't changed much.
And that means low risk to the lender. So like if I loan Cassandra $100,000 and I'm the bank and she defaults, I can turn around to the government and say, hey, she didn't pay me. You need to.
Yeah.
So I'm guaranteed my money.
Yes. So awesome. So it makes even more people homeowners, right? Mm-hmm. More eligibility. Now, Oh boy, how do I say this? The average home value, the average value of a home in relation to your income, right, before the 1980s was about 2.2, meaning your house was worth twice what you made, right? So
Up
you take
until
your
the
income and
80s?
double it up until the 80s. And now it's closer to 3.5 times since the 80s. It's now about 3.5 times is average what people buy. So you could take their income, multiply it by 3.5, which is funky because, Rachel, does that get me into I just had a thought. I really didn't think of this beforehand. What's my front end DTI really supposed to be? Your house is supposed to be, what's the narrative? About a third?
25%, between 25 and 30%.
Most people are around a third, which
Yeah.
is on brand for a house costing 3.5, being worth 3.5%, 3.5 of your income.
Yep. Words.
Yeah. So back before the 80s, your front end would have been much closer to 22%, right?
Okay.
If that makes sense. That's the math that falls through. So people a greater percentage of their income is going towards their housing, which is just illuminating a thing.
It is,
which
but
makes it even harder to pay it off.
yes.
Right?
And I feel like it's worth stopping here for a second to acknowledge that the houses we're choosing to live in are definitely more luxurious. There are more bathrooms on average in every house than people.
Basements, garages.
Oh, extra rooms for guests and 3 living
Dude.
rooms. I mean,
You ever watch a House Hunters where people are like, I need 5 bedrooms. And you're like, you have 1 child.
Right.
Stop it. No, you don't.
Well, and the reason I'm pointing this out is it's very easy to only look at the data that you want to see to fit your narrative. And somebody listening is going to be like, it's outrageous. Housing is now 3.5 times a human's income. This is ridiculous. It's really not. I mean, maybe it is. Maybe conceptually it's a terrible idea, but the house that you're getting in most cases is astronomically more luxurious than the one you were getting when it was a less percentage of your income. That's all.
Sure, you get what you pay for. And back then, before the 80s, because McMansions didn't really exist until the 80s, right?
Mm-hmm.
Like people would buy, if you think of a starter home, you think of like a ranch. Picture like a 50s
the house we grew
ranch.
up in. 3 bedrooms, 1 bathroom, kitchen, living room, unfinished basement. We were a family of 5.
No attached garage, and
no garage at all.
That was what it was. Yeah. No, there was that shutout back we used to
jump off of.
Yes. Anyway.
Okay, so we're in the 80s, 3.5 times income. Mm-hmm. And so mortgages. So, you were saying the likelihood of you paying that off just became infinitesimal. Oh my Lord.
Infinitesimal. Me too. Did you drink too much last night?
Small. No, I haven't had just a drink. Just you.
Okay.
You're listening me hungover.
Rachel, what percentage of people do you think have no mortgage in the U.S. now?
Really? This is
what percentage? Yeah.
I feel like I'm failing this test. I'm going to guess 20%.
38.
Oh, really?
So it's funny because 38% of the people have no mortgage. Back before pre-depression, it was about 40% of people, right, owning a home. And I can't get data on how many people paid that off, right?
No, I'm confused. 38% had no mortgage. Now, back before depression, how many?
40.
So were those 40% the renters? Or you're saying 40% of homeowners didn't have a mortgage? Because if you say people didn't have a mortgage, renters don't have one either.
Right. So that's the part I'm struggling. So 38% of the people now don't have a mortgage at all. They own their home free and clear. I'm sorry.
So those are not the renters.
Those are not.
So let's change our language. 38% of homeowners, we'll call them homeowners, do not have a mortgage.
Correct.
And before the Depression, 40% of homeowners did not have a mortgage.
Correct.
Okay.
So it's pretty static.
Yeah, that number stayed the same.
In
We just made a
100
bunch of
years'
free money.
time, it seems as though you have a 4 in 10 chance of getting a mortgage and paying it off and owning your home outright. It seems pretty static. So regardless of the number of people who own their home, right? So there was, oh God, I don't want to get into the weeds because I don't know a bunch about it, but I remember Hillary Clinton or the Clinton administration got shit for trying to boost home ownership, and they did, right? Home ownership went up to 60% after.
So hold on. Boosting home ownership actually means boosting mortgage money lending, period.
Yes. Because
that's the trick. Home ownership is the American dream. Is it though? Is it?
Right. Well, it depends how you define home ownership.
Right.
But so I wanted to get into without getting into too much minutia, and I'm not going to. The average lifespan of a mortgage is 10 years. Okay.
And that's the average
lifespan.
Isn't that up from even 20 years ago?
Yes. And
so you're like, which is why your interest is weighted on the front end, because they're going to get the most of their money in the beginning.
That's why. And what she says when she says the interest is weighted, it means when you amortize over the cost of the loan, when your first payment is like 90% interest and 10% principal. Mm-hmm. And then it's, like 89, 88, 87, it goes down. And so at the end, you are all principal. You're paying back what you originally borrowed, right? And not the interest.
Which is why
it's all weighted on the front.
That tiny little extra bit of principal that you could throw at your mortgage payment every month is significant because of compounding. Really, it's like a compounding effect.
Stop taking my words. I'm over here going Google compound interest. That's what I want to say, but I'm like, don't interrupt her. Don't interrupt her. Oh, she's taking all my words.
Well, thank you for letting me get one thing right.
Yeah. So compound interest is only your friend if you're earning it. If you're paying it, it's not your friend.
Right.
Obviously. But I wanted to throw out some numbers to show people
I'm catching. Bring it.
Okay, I needed that. Okay, so we know this house doesn't exist, but say you need to borrow $100,000.
Yep.
And you're borrowing at 5% interest rate.
Got it. It's $105,000.
So, what?
I said it's $105,000.
So if you're borrowing for 30 years, if you're borrowing $100,000 for 30 years, you will be paying back, and you only pay the minimum. You will be paying back $193,255.
$193,000. Hold on.
$255. Yep.
So that's
and your monthly payment will be $537. So you have a nice low monthly payment. $537 to borrow $100,000 for 30 years. Cheap.
You know what this feels like?
What?
It's like when you go to a casino and you trade money for chips, and there's no windows and there's no clocks, and you start very quickly not feeling like it's your money anymore, and it doesn't feel expensive even though you're burning up thousands of dollars.
Right.
Because that $100,000 house sounds like a reasonable price. And in your mind, you've anchored to that $100,000 purchase price. And also you have this very competitive 5% interest rate. That's a low number. That sounds, in spite of our addiction now to 2.5% mortgages, it's a very low number. And you think, okay, 5% of $100,000, that's no problem. But what you really did is just paid $200,000 for that house, almost.
Yes.
And that doesn't include your taxes and insurance.
Right, exactly. And if you are able to, say you borrow it for 15 years.
Yeah.
You would pay $142,000, a little over. Mm-hmm. And your payment would be $791 a month. So about a $260 spread, but you're saving $50,000 in interest.
Mm-hmm.
$50,000.
We have really socially been programmed to think in terms of the monthly cost of everything.
Well, who do you
buy
think?
this car?
Wait, let me do the 10-year and then we'll talk about who instilled that narrative.
Yeah.
If you borrow it for 10 years, average length of a mortgage, meaning I'm buying this house, I'm probably going to be in it for 10 years. My mortgage, 10 years. I want to own this house. I want to fucking retire. I don't want to have that because it is an expense and can impact people who are retired, right?
So this is your effective term of a mortgage. So you sign up at the front. I'm going to be, let's do it in 10 years. I know that's when I'll, okay.
Yeah. So if you plan, it's $127,000.
So now it's really cheap.
Now it's now it's like, okay, I don't feel like I'm getting bent over.
Yeah.
It's like, okay, that was worth it.
How much is my monthly?
$1,060.
Can you even get a 10-year mortgage? Is that even a product that you offer?
Absolutely.
Really?
7-year, 8-year, 9, 10, 11, all of the weird whatevers you can get a mortgage for. So I would suggest, I have suggestions. I took out a 30-year fixed and then refinanced, right? Took money out. We did improvements. So it doesn't matter. Right now, I pay double my principal so that my house is paid off by the time our children graduate from high school, so that we are free and clear on the house. Hopefully, right?
Hopefully, yeah.
So
you can have a mortgage burning party.
Years. Yes, that's my goal. And I really struggled. Should I put the money into an account for the kids for college, or should I put it in retirement? That kind of thing. But ultimately, was like, I'm paying interest for no reason. And I do mortgages, right? I'm just like everybody else. I don't want to have a mortgage for the rest of my life. I don't want to be 60 getting a 30-year fucking mortgage because I need that low monthly payment.
Yeah.
I want to sell the house and hopefully pay cash from my next house. That's my goal. I'm trying to be part of the 40%. And part of that starts with education on financial literacy and compound interest, and why it's important to not carry balances on your credit cards that are super high, because you'll never. And I learned the hard way.
Yeah.
You know what I went through, and I know what you went through. We didn't start out with a gilded spoon in our mouths, people.
No. You know what? That might be worth, I don't want to go like too far down any rabbit trail, but when Cassandra says we learned the hard way, that's not just platitudes. I spent 3 years with very high credit debt due to some bad choices and life choices that I made that put me in this position. I spent 3 years working 3 jobs, making minimum payments just to keep my head above water, until I finally realized that I had this is going to make me cry because I was...
Dude, I'm teared up too.
It was so ashamed, right? But I had a bankruptcy in my past, and I had to use that tool in order to move forward. I'm not proud of it. I'm not here saying, oh, just do whatever, and then you can just call bankruptcy. It was really hard.
Like Michael Scott, I declare bankruptcy.
Yes. Yeah. But I had to work my way out of it and learn some things about money and about myself and choices I was making that put me in that position. And Cassandra, share yours.
Oh, yeah. I was a single mom. I was a single mom, solo with no help, and could barely make my house payment. My brother bought me tires from Colorado and said, go. I mean, I was broke. I could afford my house and daycare, and everything else went on the credit card. And over many years, 6 years, boy, did that balance grow to the point where my minimum monthly was not moving the need. I mean, $500 minimum monthly payment, and the balance never changes. And this is before I had any financial literacy. I called and basically begged and said, I don't want to declare bankruptcy. Can you please stop charging me interest and put me on a set repayment plan and I paid 5 years. They drafted the same amount. And I knew that if they ever missed the payment, because I would pay on time, I didn't miss payments, but boy, it wasn't moving and it was really awful.
Yeah.
Anyway, I agreed to a 5-year auto draft, and if I ever missed a payment, all of that interest would accumulate. The only reason I paid off 20 grand in credit card debt was because I had a person on the other end of the phone who negotiated with me like I was a human. I was fucking desperate.
Yeah.
But managed to pay that off, pay my student loans off, pay my car off, really double down and focus on it, and was able to get out of debt. And it was a long 5 years,
Yeah.
long 5 years.
Yeah. And if you, I just feel like I have to throw this piece of advice out there, because a thing that I didn't know, and full context for my story, I was in a marriage with a person who was even less financial literate than I am. And I made the mistake of getting my finances mixed up with his. So I was incurring debt that I was not actually incurring. I was dumb. I put my name on stuff that I shouldn't have. Because I don't want people to think I was out like taking glamorous trips and buying bonbons and electronics to rack up my debt, you know? But one thing I didn't know, again, no financial literacy, all of this is bringing up so many big emotions. So I went to cash only everything. I was like, all this credit got me in trouble. I'm going to go like the Dave Ramsey way. But in my head, it was the Phil Evers way, right? Like got actual cash in the safe and I'm not using a credit card. So when I finally was able to poke my head above the clouds, if you will, and see light at the end of the tunnel, I call my sister, who's a newly minted mortgage broker, and I'm like, hey, I'd like to buy a house. And she's like, you have no credit. I was like, well, no, I was so proud. I've been paying cash for everything. Yeah. And she was like, so here's what you need to do. Go get a credit card. Buy
Speedway
gas
card.
on a, yes, it was
Speedway card.
Speedway gasoline got me my mortgage, and got me my mortgage with a good rate, because I then learned not only do you get the card, you keep always paid off a balance, or keep a balance of 25% ish of my total available. Yep. So I think they gave me like a $600 line of credit, and it seemed like so much money to me at the time. I was like, okay, so I can only I'll go get gas and I'll carry that bit. I don't know. But I didn't know. Now I know. Now I over know.
Right. And I didn't know until I knew. Right. And I do thank my first boss for Wade Hoytel for saying, hey, you should come do these mortgages. And I said,
what were you doing at the time? I love this story.
I was in flooring, and I actually sold him and his wife flooring, but my sales tactic is not selly. It is like, I'm just there to help. And he was like, I love that. People need more of that. You know, the whole everybody loves to buy, nobody loves to be sold. I don't sell. I'm not a good salesperson. I think everybody knows that, but I'm really honest.
We're in the business of educating consumers so that they can decide. And then we'll help you get there. I feel like we run our client interactions very similar.
Yeah. And that's what I did. And he said, come try it. And I ultimately figured, at least I'll learn something if I hate it. It sounds like the most boring thing in the world, and I don't like math, but I ended up loving it. And I ended up loving it. And I learned so much. I learned so much from Kristen. Shout out to Kristen. Yep. Who was our in-house credit advisor. And I learned so much. Oh, yeah.
Oh, I didn't know that.
It was an in-house position, and I learned a bunch from her. She used to work at a big bank, and would help people get credit ready.
Yeah,
and how to negotiate. And I didn't know it was possible to do. I learned so much, and now I just go, wow. I've gone to Wyatt's school when he was in middle school to teach, like, what do I do, right? And I always include a little bit about credit. And it's infuriating to me that they really don't have a life skills class on financial management, but boy, you can get on college campus and they'll give you credit cards immediately.
For sure. And bringing it home full circle, it's interesting in context to think about the mortgage product and home ownership, especially when it comes to like stories like ours. I would not have been able to buy my house if it wasn't for a government program. Do you remember my first mortgage? What was it?
Rural development.
With what? A grant money attached to it.
Yeah, a grant. You got a free grant.
I did.
Yes, there was a housing incentive. Yeah, she got a grant that helped with her closing costs.
Those were, still flying back in the day when I bought my house.
192,000. It came in like $1,000 under value. I remember your
Yeah.
appraisal, like the appraiser tried and just couldn't get there. Am
Yeah,
I wrong there?
196. I paid
Okay.
196 for my house, and I had a rural development loan, which means I borrowed 100% of it. And
101.
I was going to say, and I borrowed closing costs, and I had a $3,000 grant to offset. Go ahead. What?
Well, there's a funding fee. And
Yeah.
that's currently 1% of the loan amount. So
I'm
if you're
sorry.
borrowing
The
100,
funding
it's,
fee in
yeah.
my mind is a closing cost. Like it's a fee for the
Oh,
money. So yes, you're right. I borrowed more than the value of the house, and I
yes,
had
you were upside down
assistance to buy it.
immediately.
Yeah. Yeah. It's funny
Yeah.
because like I'm becoming incredibly, especially with what the market is doing today, incredibly hyper aware of how much luck and timing had to do with my ability to buy my house. It wasn't a
Yeah.
me thing. I didn't do like, if I was coming out of the exact same circumstance today, I would be renting. I would not have, the context of home buying right now is vastly different in just 10 years, 9 years.
Yes. Yep. My first home purchase versus my second versus
Yeah.
this one. They've all been radically different. But my goal is to set myself up to not have to do a mortgage.
Yeah.
Right. And so I'm striving towards that, learning from mistakes. And we didn't get back to this, but who drives the narrative, do you think,
Oh
of
yeah, let's
that
go.
low monthly payment? And I know we're almost out of time, but
Yeah.
the low monthly payment,
The
why is that the only
global
thing that matters?
central
And the
global
interest rate,
bank.
why are those the only things that matter? Why
The
don't we talk about the term more?
It's the global banking industry. It's the man.
Yeah. So when, I don't want to get into this.
No,
When
we
the
won't.
bank,
3 minutes. Do it.
okay. When the banks are borrowing at 0 from the Fed Reserve and charging you 3%, right? And they have overhead and things like that for just to borrow money for a house or a car or whatever. But they're telling you the 30 years the way to go because your payment's low or you already have too much debt and it's the only way you can afford the house.
Because they're
Perhaps
making
you
more
should.
money.
Yes, they're making money on your car loan. They're making money on your student loans. They're making money on your mortgage. They're making money on your credit cards. The fact that we leverage ourselves so highly, there is something to be said about living debt free. You do have to run some money through the system so that you have a credit score so that you can borrow if you need to. I will stress the importance of that forever because
Well, we just
living
covered
off
it
the
with my
grid
story.
doesn't work.
Cash only.
Exactly.
Sorry, you can't borrow anything.
Yeah, but that narrative of minimum monthly payments, I just pulled credit for a couple. This is their third refinance. They've been in their house for over 10 years. They have pulled cash out over and over again, and every single time their credit debt goes up. Every time they're maxed out. I mean, I'm talking 50 grand, 60
Wow.
grand, 70 grand, and then I can see new loans for like that to pay like a $7,000 loan with no asset behind it, which is to
Like
pay
a signature
something else
loan.
off. Yes, which carry higher rates. So
Home
that
equity lines of credit. I mean, I can't tell you how many ads. I have one. I haven't used it, thankfully. I have it for a reason, but
it's good to have one on the side.
you told me that. But
Yeah.
every billboard in my community about 6 months ago was like, tap that equity, borrow that money, use it to make your house better, take that family vacation. You deserve it. It's cheap. It also may like prevent you from ever paying off your house. I don't know.
Right.
This is
interest only. Anyway.
Yeah, this
We don't have
conversation
mortgage
is for
burning.
credit.
Okay, so we'll end with we don't have mortgage burning parties because it's impossible to pay off your mortgage based on statistics if you don't go for
Overpay.
a lower term, keep that debt to income ratio low and make it a priority to do so. It's not all about the monthly payment.
Yeah, the system is not designed for you to pay off that mortgage. And I want to add, because I feel like I'm not even going to tell you why. If you have a specific scenario that you think Cassandra or I can help you with, please reach out to us. We have done a piss poor job of saying that, but I answer questions for people constantly. So does she. And I am, if I can't help you, I'll point you in the right direction, and so will she. So, and I'm going to say my phone number and yours if you're okay with that, Cassandra.
Yes.
I am 810-923-5421. Cassandra is 269-207-2193. It is the only phone number I have memorized. I'm not kidding you.
I can't even believe you have my phone number memorized. I don't have yours memorized. I have Adam's memorized. That's it.
I have yours. I have Mark's too, and Nash's. So I have like 3 in my head, and you made the cut. Anyway, I know, right?
Yeah.
Hey, also, I opened up a real estate brokerage. So if you're an agent who's worth a shit and you're looking for a place to hang your license and you think I might be a good fit, that was unintentionally poetic, you can call me for that too.
Yeah.
I'm going to get into the shameless plugs. Anyway, thank you for joining us. And let's do this again next week, shall we?
Sounds good.
Bye.
The info given is current as of this recording, but remember, the market changes and real estate is hyper local.